Should be good now. How's everybody doing? How's the sound? Give me a quick sound check. Get that stuff out of the way. And we'll be good to rock and roll. Who says that besides boomers? Right? It's something my dad would say. But good morning, good evening, good afternoon. It is nice New York lunch right now. Fairly sunny, kind of humid. Okay, Freak, what's going on? Cornholio. Just give me a sound check real quick, guys, and then I'll get into the... I know, it's going to be a split second where there's no sound. So. Let's wait for you guys to catch up. All right, cool. All right, so how's everybody doing? Thanks for tuning in, guys. So this is going to be a normal stream. The last couple of streams I've been doing, I've done the live trading, and I haven't really done any kind of talking. So I just do the I'll write on the screen, which is really it's a lot better if I'm trading for me to do that rather than like address questions and talk and get lost in a train of thought. I know you guys see how frequently I could do that, but so we're just gonna go over higher time frame right now. Obviously, not much has changed, but I think that's something that we should kind of drill down because or hammer down. I guess you could say drill down, but because there's a lot of people that are looking for a breakout, and we're still within the range. So okay, comp short paid out well. Yeah, I actually I closed that out. But anyhow, what's going on, everybody? My name is Ryan, also known as Cantering Clark, and on behalf of myself and my partner Josh Rager, I want to thank you guys for tuning in. As a reminder, for this stream, all streams, anything that you see on the BlockRoots YouTube channel, on our Twitters as well, none of this is to be taken as financial advice. This is strictly for entertainment purposes only. I am just a horse head. That's it. Also, this stream is sponsored by our partners at Phemex. It's more than sponsored by them. You know, we've been partners with them for going on 2 years. Right. So time flies when you're having pandemics, right? Normally time flies when you're having fun, but so we've been partners with Phemex for a really long time now. They offer contract trading, spot trading, and they offer yield if you deposit USDT, and it's really generous and it hasn't changed, whereas a lot of other yields have gone down. So be sure to check them out. As you can see on the upper left-hand corner of the screen, it says Phemex.trade, and if you use that link, you'll gain access to whatever kind of promotional feature that they're running. I always say that, and they're changing it all the time, so you know, it could be a $100 bonus, could be a $500 bonus, it could be, 30% reduction in trading fees. I don't know what it is because it's constantly changing, but you are offered an incentive to use a ref link, obviously, and then that's what that is. So just being upfront. If you don't like the exchange, you don't have to use it. No one's forcing your hand. Okay. Sound is good. So yeah, I've been really busy lately. We're closing on a house, and normally closing on a house for anyone who's never done it before, it's a pain in the ass. Usually it takes a long time, and this actually doesn't because it's a really unique situation. First of all, so for those of you who've been following me for a long time, you know that I shared the blueprints and the build setup for a house my wife and I were going to be building, and it was another barn, it was another horse property. And it was going to be awesome, right? It was going to be awesome. We were taking over someone's property, a guy who was in the telecom business. His business went down. He lost millions of dollars. He lost a lot of money in the house. We were going to take it over. We were going to build on it and, make my wife's dream home. And she always said, if I can't have this, and she made a joke, in case it fell through, then the only thing that I'm going to settle for is home on the water, wink, wink. So we actually got a house that is right on the water. But it turns out that, and this is, I don't believe in, I believe everything happens for a reason. So I'm not upset about the house, the other house falling through, because ultimately we are getting to the house that we're getting into now. But a childhood friend, his business partner, they both own a bunch of commercial real estate. His business partner on the side also, was buying houses and, totally blowing them out, reconstructing them. And, we were away on vacation. And we learned about this relationship when we were there. And then when we were out for tacos one day, we happened to be introduced to the other business partner who owned the home. And we struck a deal like that. And this closing is going to take place in less than 30 days, which is that's kind of unheard of. You know, closings are usually a really long, sort of arduous, pain in the ass process. Yeah. Okay, so we're gonna go over BTC. Went over all of the, you know, shit in the beginning that we have to go over. Touched on the no financial advice part, which is very important. Let me just pop the chat out. How's everybody feeling right now? First of all, what do we think about BTC? Just take the temperature really quickly on the on who we have in the chat. Just make sure that I have all my stuff up here. Okay. Yeah, how are we feeling about BTC? What are we, bullish? We bearish? Say hi to everybody. Okay. Rooster. All right. Let's go through the chat real quick. Thank you, guys. Thank you. Cool. Neutral to down. Bullish. Bear market. Every rip sold. Scared. No feelings. Flatline. BTC fishy. Kind of bearish. Goblin Town. So it's not called Goblin Town anymore. It's called the Shadow Realm. Bearish to neutral. Flip mid. Then may flip bias numb. Yeah, numb. That's good. Okay. Bearish at the moment. Higher time frame low. Bearish. Okay. Bad weekend coming. So, you know, we're going into a holiday weekend. You know, 4th of July in the United States is a pretty big holiday. That's on Sunday. You can imagine that a lot of people are probably signing out a little bit early going into the weekend. But, yeah, I don't know what to expect from this weekend. So a couple things, you know, traditional markets right now looking good, right? The S&P 500. Equities moving up. If we just look at the ES or the S&P today, you know, trading over 43 or 4,310 right now. So back at the highs, you know, and this is just something that, you know, for the amount of time that I've been in markets, and I'm sure many of you can attest to this too, the S&P is just like an all-time high printing machine. Obviously not as significant as it is for BTC. Completely different instrument. But equities moving up. You know, tech looks decent right now. It's up about 1% for the week. Tech is, you know, AMD doing well. A few names within the tech sector doing exceptional in the last couple of weeks. So I think that that's good. I always say that BTC, and I've said this now for like 3 years, the BTC is kind of like a high beta tech stock. So we have an environment that is, it should be facilitative of higher prices in risk assets. I think that we are definitely going through a regime change right now. I would say that, you know, with all the talk of tapering, you know, that constantly comes up with the Fed, I think that at this point we're beginning to just, and I said this going on about maybe a month or two ago, we're probably pricing this stuff in to an extent. Now you can't obviously price it in completely, but I think the market is responding in anticipation to some degree of future tapering right now. So there is what seems to be maybe a regime change that is taking place. And if we see that equities continue to move up and, you know, stock market looks healthy and, you know, consumer confidence is kind of through the roof at this point, job market looking good. If we see all of these things and Bitcoin doesn't continue to move up, I guess that would lead me to be a little bit worrisome. Because, you know, I think that while BTC, again, it is sort of a chameleon and it does benefit from being able to sometimes be a risk-off asset, you know, part of that narrative, and sometimes be a risk-on asset. I think that when things are risk-on, you definitely want to see that BTC is responding somewhat like a risk asset, right? Not being, as I've often said, listless. So it is ranging, like you said. It is ranging. And I think that's one of the more important things to go over. Let me just slide this chat to the side so that I can see it. You guys can see this window nicely, right? So, okay, we just make sure that this is fit into the screen properly. All right, just exit out some of the stuff at the top. All right, so BTC, you know, like you said, we've been within a range, right? Crab market. Why is it a crab market? You know, crabs move sideways. Okay, if you ever seen a crab, you know, crawling on the beach, it moves sideways. So it is within a range, right? And there are, you know, there are cases to be made for this being an accumulation range. There's cases to be made for this being a distribution range. I was going to say distributive. I think that the mistake that a lot of people make is playing for breakouts while you're within the range, right? So we could define this range many different ways. You know, there's a lot of different systems that might draw different ranges, right? So let me just change the color of this because I just noticed it's not showing up. So that should be visible now. Whether it's a high, low, right? And then at this point, you know, if we're looking at the initial low and then the follow-up high within the range, you know, we'll just draw a midpoint from there. Whether it is, you know, an entire volume profile, a composite profile, right? So a fixed range. So from the low to where we currently are, let me just adjust that so we could have us a little bit cleaner. Tick size down. Get rid of that highlighting box. Input. Let's go 150. You know, price is the point of control, midpoint of the range, you know, center mass of the range. We are rejected at that. We weren't able to reclaim that, but we're still within a range, right? So you're going to see a lot of different conversations taking place right now about price. You know, it's bullish, it's bearish, but the truth is it's just stuck within a range, right? So any kind of sideways consolidation period like this, the longer that it moves sideways, the more likely that any kind of acceptance outside of it is going to lead to a sustained move. Okay, so a few things to point out really quickly. You know, we have a series of lower lows and lower highs within here, right? We finally had a break up above the range, failed to accept outside and maintain. We had a break below, right? Failed to continue down, back within the range. I think that at this point, you know, and I've said this many times before, if you have a range like this that is being established, right, with relatively clean highs and clean lows, if you have one of these and you have these two deviations at both sides, one sec, do my best not to slurp. If you have two deviations at both sides, the return back to one of these areas is probably going to be the one to not continue to fade to that point, rather to go with. So in this case, let's say we were to continue to move back down towards the lows, or in the opposite case, if we were to move back above at the highs. Meaning, if we are to accept, like over, say, for example, 40K, you know, it's not in your best interest to assume that at this point, if we're back above here, that we're just going to continue to range within this structure. It's very likely that, you know, you accept above 40K. You know, we have clean signs of acceptance, you know, volume coming in, buyers supportive of this, finally some aggressiveness by buyers. Okay, if we see that, you know, at that point, it's very likely that we're going to see around 45, maybe upwards of 47 and so forth. Same can be said for the downside though, right? You do have a series of obviously lower lows in this case. We did have this tap followed by a breakdown and recovery, and normally this is something that I would say would be bullish, okay, where you have, for example, you know, we have this breakdown, underside retest, breakdown again, but now we're back up here. So we have a breakdown like that. Now we're back up here. More often than not, this is something that I'm going to look to reverse, right? Or this is going to be bullish if we're able to accept and find support above this pivot. Instead, you know, we had that move up above, back to the point where we were rejected. Looked like it was finding support, but now it looks like, you know, we're potentially making another move back down to these lows. At that point, you know, how much longer are we going to continue to expect this range to hold? It's not moving down and cutting down like a knife, but it is overall the price action is beginning to drift lower, which ultimately would lead, in my opinion, to, if you just kept drifting lower at this point, there's going to be a point where the market starts accelerating and you're going to have a more violent dump again. So if we're looking at this from any standpoint, right? So we'll go back to how we were looking at it as we were breaking down. So we looked at it like we were accepting back within a prior range, right? So this is our prior weekly range, accepting back within there. You can see that we're favoring, you know, if this is the midpoint, we're favoring the lower portion of this right now. But if we look at the daily, you know, this is what we would say if we're looking at, a TPO structure. If we're looking at the weekly TPOs, shit, this is why I should have Quant Tower set up, because XO doesn't have weekly TPO charts. But you have a bunch of value overlap. Price is relatively confined to the same area. We look at this as a composite again, as I just said. If we look at this as a composite, fuck, it changed. I hate that. That's so fucking annoying. Either way, value area high, value area low. And price spent most of the time, 70% of the time, within, 38.5 down to 32.5, right? So when you're within a range, the only significant areas you're going to look for a breakout are the high and the low. Everything that takes place within here, you should expect to mean revert at these levels, okay, up until some point though, right? So the further that we continue to test this downside, the more likely it is to give way. It's not that, the more you tap something, the stronger it gets. You have to imagine, just imagine in this situation that there is a finite amount of buyers here and a finite amount of sellers. If you're going to continue to chisel away at that, you're going to deplete it, okay? So I think it's very unlikely that if we continue to test these lows, that I don't think it's a good idea to be bullish if we continue to test these lows in the fashion that we have, right? So one thing that I did say was that we could expect, and I said this in the stream the other day, if we get rid of this line now, we just look at where price interacted with the most, and remember, you should just consider this as zones, all right? Low, 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 lows, a lot of interaction down here. So if we're looking at where price interacted the most, one thing that I did say was, and this is why I said bidding 33, I ended up getting flat yesterday or last night, and that means that I canceled those orders as well. This is an area where we might find support. If this is some kind of bottoming structure, you could expect this kind of pullback, right? I don't think that, in just my opinion, my opinion alone, I think it's unlikely that you resolve out of this range without a very violent initial dump followed by a squeeze upward. It's just my opinion. I don't think it's likely that you kind of just drift slowly up, retake levels, and that's that. We haven't really seen much of an interest by buyers, right? Other than passive buyers that are obviously absorbing a good amount of the selling, we haven't really seen that much of aggressiveness or eagerness, rather, for them to lift the offer, and to get into position, right, aggressively, which means using market orders and jumping at the opportunity. Think about it like that, jumping at the opportunity. The drawing tool is called Epic Pen. So I don't really necessarily like the way this looks right now, but there are some details that I do normally like to see to make a case for potentially a bottom or some type of structure forming that will lead to a sustained move in the opposite direction. And one of those is, okay, if we've had a ranging structure like this where the lows are, they're intact. We've had multiple attempts at the lows though. If anything, more clearly it's been that we've had attempts at the lows than any kind of attempts at the highs more recently, right? The last high of this range goes back to about, what are we now? We're talking 2 weeks ago, right? We've spent most of the last 2 weeks in the lower portion of this range. Not to say you cannot have a violent response that very quickly covers that gap. But this, right now, price action alone is not really exuding what you would want to see if you're going to make a case for this, showing really clear signs of strength in price action. Again, it looks kind of listless. But what you do see is the signs that you would want to see add up overall, right? Which is the market betting on this breaking down, the market getting into position, the market selling. Because as long as the lows are still intact, if there is continued selling, and we see things like, for example, funding remaining negative, if we see, for example, basis closed, right, basis near zero, futures term structure flat, we see skew indicating that people are buying a lot of protection, that put buying is outright in excess of call buying. For example, call implied volatility is less than put implied volatility, something like 30-20 delta skew or 25 delta skew. When we have all those things line up, right, the last thing we want to look for to make a case for, okay, this is a good bottom forming, is the sign of strength in price action. That's the most important thing for me, though. I still need to see that sign of strength. So, for example, what would have been a really strong indication of that to me would be something like retaking local market structure, right? So, okay, we've had, for example, Coinbase trading above Bybit for a sustained period of time. We've had, funding overall, if we look at this structure over the last 2 weeks, right? Funding, right? Indicating that there's been a lot of aggressiveness by sellers, okay? So we've had all that, but we haven't been able to retake and trade higher. So what do I mean by that? I mean, all right, so in the process of putting in all of those details, right, all of the price action that created that feedback, so we're looking at negative funding, again, we're looking at the way that term structure and basis is, but we're not able to retake and hold a previous level. So that would be a sign of strength, right? It's as simple as, okay, we have a series of, for example, right here you have a series of low, high, higher low, higher high, right? Started losing that, so weakness. All right, and then more recently, a sign of strength and price action would have been, okay, so we put in a low, a high, not a higher low, right, unless you're looking at this wick. Kind of spent more of the time down there, but potentially a higher low in the making if we were able to hold this previous pivot right around 34.5. So that would have been a great sign of strength, right? Price is unable to trade lower than that. We see buyers absorbing that. We see an interest by buyers again, maybe some I would say greater sense of urgency. You don't really see it in the tape right now. You don't really see any kind of strength in price action. If we started to see that, right, if we held this support, all right, then we have a really strong case to be made for what ultimately would, your immediate target would be the range high again, right? Because as a reminder, we're still stuck within a range. There's no breakouts to trade right now. There are no, I'm just looking over at the chat, just making sure that I'm scrolling all the way down. There are no breakouts to trade right now, okay? There are levels that we might break through, but there are no breakouts to trade, all right? If you're looking at the, if we're looking at just the last couple of days structures, this is not a balanced structure. This is balanced towards the lower portion of it. The last balanced day we had was back here. I talked about that inside day that could have been setting up. It ended up that we broke out of this. We had a break from balance before and another inside day setup. But we don't have any kind of balance unless we go back a couple days. And even then, we're still coming off of a balance day down here. Imbalance move up, balance day, and then imbalance, imbalance, imbalance with structural anomalies within. So it's not like we're setting anything up even within a local range. Within market, I don't want to say microstructure because that's not the actual market structure and candle structure, but has to do with exchanges and order books. But we're not setting up anything to say like, this is a breakout in the making, right? If we're talking about local levels, we have, this single print gap right here. That's from 33.8 to 34. So a $200 space right there. But I mean, you're looking at potentially finding resistance at 34.2. Above that, we're looking at the underside of this structure around 34.4. There's no runway for a breakout. The only level that you should be looking to play breakouts from are the highs and the lows at this point, right? Again, they're very clear, haven't really changed. All the behavior that takes place within here, it's just micro level to micro level, and that's it, right? So if we're looking at this structure from a range standpoint on the high time frame, what you would ultimately want to see if you're bullish, and again, define it any way you want. There's multiple ways you could look at this, but you'll see that there's confluence between the multiple ways you could look at it, meaning if you're looking at high-low using fib, if you're looking at the composite, profile, and it's the point of control, and you see how balanced the structure is overall, the midline is going to be in relatively the same spot. So what I'm just saying is this midpoint between any of those approaches is going to be the same. And that's right around 35, going back a couple days or a week ago now of saying, hey, 35.5, 36, that would be a great area to find support. We talked about that back here. So somewhere within here, we're talking about this level. If we could find support above there, you're looking at a play back up to the highs. So ultimately, we've failed at the midpoint, right? Previous portions within the structure, have we done that? I mean, no. Could you say that the midpoint was as established as it is now? No, but still, we have moved from the low to the high, back to the low, back to the high, kind of tightening up within here. Finally, though, break back down to the low. And then what are we doing? We initially test this as support. Don't hold it though. On the breakdown though, this middle area, right? It's always an area. It's not a line in the sand. So remember that. It's a zone. So this middle zone, we still found support there and found our way to the other side of the range. And this behavior is what you should anticipate and expect and try to position for if you're trading. Again, not financial advice, but I'm talking to myself, right? Ryan, you should try to position for this. So instead of a failure here, a test lower again, and then a sign of strength and reclaim, and then a move back to these highs, which would make this look like a fantastic bottoming structure. Instead, we're having two failures at the midpoint of the range, leading to ultimately what would be a target back at the lows of this structure. So really what you're doing, if you're turning a blind eye to the technicals, you're saying that you think that a surprise is going to happen. You're anticipating some type of violent response that is not really, that is leaving out, is, I guess, happy with omitting the sign of strength and price action. All right, it's almost like saying, I'm willing to overlook the fact that price action looks like shit. I think that it's going to go up anyway because of X, Y, and Z. Right? I think that this is all, accumulation structure. It's meant to chop you up. It's meant to shake out weak hands, yada, yada, yada. The market is in a bear cycle right now. It's in the bear portion of the cycle. There's no denying that. So I think the most important thing to do is to, one, now operate with that as precedence, right? Meaning sell rallies, and you could buy dips, but you have to be willing to sell those rallies, right? Whereas a lot of people right now are still in just bull market mode, buying into resistance. You have to assume that this is has a higher likelihood of continuing down than up until proven otherwise. And I think that's why it's really important right now to really put emphasis on the strength and price action. And for those of you that are uncertain what I mean, again, when I say strength and price action, I'm just talking about something like this. Price action dictates that we're in a downtrend. Okay, something very simple and very textbook looking like this. We know it's never like this. We have your zones here. All right, so sign of strength is simply changing this, showing that this is potentially starting to change. Rather than this leading to continuation, it's more likely going to look something like this. Maybe we've done something like this. So we're starting to retrade above previous pivots. So retake previous levels. And if your range looked something like this, so let's say that, this is a range. All right, so a sign of strength would be, if this is like your midpoint, would be what? It would be continuously retrading back above levels that serve to reject you on the way back down, and trading back above, I just said that, trading back above them and using them as support. Rather, instead of that right now, we're doing something like this. We're failing at the levels that you would want to see a sign of strength at, right? Sign of strength for me is just, it's just a way of saying that we're retaking the level, right? Trading back above it. Buyers are in control to some degree. I mean, if we're looking at this based on some basic trending tools, if we look at the 20-period moving average, I think your 20-period moving average on the weekly is probably one of the most important things. I mean, you could get away with trading that or just using that as your higher time frame, longer term trend tool, and you would capture a majority of the trend for BTC going back into its entire history. So we're back below the 20-period weekly moving average. It's never boded well for BTC when that's occurred. Multiple weekly closes. It's also never resolved quickly. So another thing to consider is that we have all these signs that show there's a lot of selling. The positives also are not only that there's a lot of selling, and it's not leading to lower prices. One other positive is there's a lot of FUD. We haven't seen that the FUD is leading to lower prices, but this all could be because of you have to think about it like this. This might be because of the willingness by people right now to buy what they consider to be just a big dip, right? Before ultimately what might come as a larger flush down, right? So one thing to consider is that this is a bearish shift in the trend all the way up to the higher time frames. You can't go to another time frame to escape it like you can when it's occurring on the low time frames. You can't say, the weekly's still, the 4 hour looks like shit, but the weekly is still intact. It's not intact, or technically, if you're looking back at this previous weekly level, all right, so you might have that little bit of solace. But after the kind of sustained move that we've had, and we're just playing devil's advocate, after this is 300 and 390 days or something like that. After that, and we've had a breakdown. It's never been where we've just moseyed on correcting for a month and then recovered and continue to move up. It's always taken a substantial amount of time to build a base, to recover, and if that's the case, to resume the bullish trend. I still think that it's the end of the year. And I clarify, I think the earliest we're looking at is the end of the year, before you could even consider new all-time highs. I don't think that even if this breaks above, I don't think that this does this. I don't think so whatsoever. If you don't have the strength to continue to do that right here, what makes you think that suddenly, if we're talking 2 months from now, a month from now, that buyers are going to be willing to buy it at 70K and 80K? You have to put in a much longer, in my experience, you have to put in a much longer corrective period. And that means something like, for example, if we do break above this range high, let's say that the move is, so all this trapped behavior down here leads to the squeeze up. All right, it's expected squeeze up because we haven't really had the level mean reversion you would expect after a breakdown. Let's say we get that. I fully anticipate that something like this could be setting up, where you still go on to correct and move sideways. And it's just a much larger range, and it occurs, you might say, well, why would that happen? If we've been doing this for this long and we finally break up, why would we finally break back down? Well, the break that we get from this, it should be violent. It should move far and fast, not because it necessarily means there's a ton of demand, but because this kind of consolidation creates a lot of pent up energy, right? You go from, highly kinetic on the way up to potential, highly kinetic, think about it in physics terms, right? To potential, stored energy. Finally, when you release this, right, you have an explosive move. And that's going to be a very imbalanced move, and it doesn't necessarily have to be on part of organic buying behavior. What happens is, the same thing that would happen to the downside, is at these highs, you have traders that are placing their bets already. At the lows, you have traders that are placing their bets already. All right, if they haven't been swept already, if they're currently placing breakout buys up here now, if they're currently placing their buy stops for their shorts, the longer that we move within here and that we don't interrupt those, the more likely that when you finally do, it leads to a very explosive move. You have to think about this as being like, it's kind of like the more we move sideways, the more that they're adding, nitroglycerin to this. They're adding, TNT to this, or some kind of accelerant. So it's just building up over here, right? And you finally spark that and you get a very explosive, impulsive move. And a very impulsive and explosive move like that, it might not necessarily be something that leads to a sustainable move, especially if it's a short squeeze, right? If you have, shorts up here that are accumulated, that are still getting away with being in position, and their stops are here, well, if you squeeze them, they're not necessarily buyers stepping in because they're entering in the market. They're buying because they're exiting their positions. So I think that is something to consider. And, this should be high time frame technical resistance. It's, your weekly time frame seller is going to still be up there. A lot of people right now are looking for an exit pump, right? So, they didn't get out at good prices. They weren't selling a little bit back here. They didn't sell whenever we had multiple tests of these lows. They're in position down here thinking, fuck, I just gave back a ton of my profits. If I just get that bounce, I could get out, I could buy that house. If I just get that bounce, I could get out and I'll refigure it out then. But God, I just want to sit out of the market for a little bit at a better price. You best believe that there's going to be a lot of sell pressure. So I think that's really important to consider. So that's just a higher time frame. I don't really like to go over the higher time frame stuff too much because I feel like it's just obvious at this point. I trade the low time frames right now. I'll take a higher time frame trade if we get. I'll really amp it up if we get a move back above these highs, and I'm talking the long side of things. Short side of things, I don't know. I don't like to short Bitcoin. I don't like to short it with the idea of going much lower, just because I'm talking about this resolving impulsively and potentially leading to a reversal either way. Who's to say that this suddenly doesn't become a move that leads to a much larger squeeze up? We've seen it before. It looks very obvious at this point that, we got the range. If you break to the downside, it's going much lower. That hasn't worked out too well in the past. We could say that because, hey, it's what we have. We see that this is kind of a baseless move. One of the questions you always want to ask is, has price built a base for the move that it's putting in? Well, this was that base. This was a huge rip. There's not much structure within there. So you have to look at this and say, all right, it might be important to be a little bit prudent around this location, just because there's not much structure that we could say would act as technical support. But we say that because I think it's important to operate with that kind of thinking, period. But in the past, we had sort of a similar structure. You had this gap leading to this consolidation. We broke down there. It looked like that was Goblin Town. You finally got the rip out of the consolidation, right? Finally got the breakdown. Then that led to that she candle. And the next thing you know, you were 100% certain that if this broke down, it was leading to much lower prices. And in a matter of like 24 hours, it's as if the range didn't matter at all at the highs, right? These highs, they seemed like they were so important within the range. I mean, shit, we couldn't find our footing above it whatsoever. And you're telling me 24 hours later we're above everything and we're all the way back up here? So a lot of times things like that are going to happen and it's not going to make sense to you, right? Until you think, okay, where is the crowded trade that's going to take place potentially? That could be taken advantage of if you are, a massive whale trying to move the market, right? Okay, well, maybe I'm going to sell a lot of spot, push this down, create those breakout shorters, and then finally I'll provide my bid down here and push the market back up and use that as fuel. All right. So I don't want to operate with the same sort of if this then that criteria at the lows as I would at the highs. If we break above 40 now, I'm really going to be looking to get on a really nice swing position to play to the underside of this range. If we break below the lows, I'm kind of guarded. Like I think, hey, what happens if we wick down into 25, settle here for a second? It looks like bait, hang the bait right in front of them. Everyone shorts at this point. Everyone gets in a hedge. And then finally, this is the rip. And the next thing you know, we're back above treating the top side of the structure as support. And that to me would be a no-brainer long too, right? I wanted that right here. That's what I was talking about with this structure right here. Yeah, okay, we broke the low. Now we're ripping back up. Like you immediately want to see, if you're expecting this to continue, that it's going to retake a local level and treat it as support. Many times I've gone over just the simple drawing.
I couldn't hear what you said.
All right, well, you weren't supposed to. All right, CIA. What you're looking at is, if you have a range and a breakdown, you see something like this, you don't fade that, right? You get the breakdown at the bottom, complete reversal. Now you're treating a previous resistance as support. So you wanted to see that sign of strength within here. We didn't get it. There's no reason to say it can't happen, though, by us breaking down lower. And then we're trading and we're back above. If we do something like that, we're treating any previous pivot as support, I'm going to immediately, get long into that position with the expectation of, treating the range high as the next target. And if we broke down like this and we're trading back above here, I think you're probably moving much higher at that point. But these are the things you have to sort of plan for. And that's why I'm never going to open up a short with Bitcoin unless it's mostly a hedge, right? I'm never going to outright short Bitcoin in excess of what my portfolio value is going to be. Like it's a 100 vol plus asset. Like you've seen how you could place the short and you're like, oh, I'm going to go make myself a peanut butter and jelly sandwich now. I have a few minutes. And how many times have you put on a position, come back to it, and suddenly it's like absolutely like some mind-numbing reversal happens that you were just like, how could that happen? Like we've been dealing with this fucking resistance for the last 2 weeks and suddenly it's going to rip after we break down. But it makes sense when you think of the imbalance it creates whenever you break down. You get all those people that are jumping ship, right? Let me just go through the chat real quick because we're kind of just rambling on about the high time frame. Nothing has changed with the high time frame with regard to, we're still trading at, spots trading at, it's trading tighter now with derivatives. If you look at Binance futures trading slightly below Binance spot, if we look at, let me get rid of this really quickly because that's why it's not showing Bybit, it's showing FTX. Because I had to compress the screen for the stream. Where is Bybit? So Bybit 244. Bybit's trading at a $40 discount to spot. That's good. Perps trading at a discount to spot is good, but it's not everything because we've seen that for a while now. And we haven't again seen a sign of strength in price action that's adequate enough to say, okay, this is a really bet the farm kind of position that we need to take. Another thing to point out, yesterday's move to the downside definitely was helped by the fact that Bitfinex was down. And I think Bitfinex was down today too, right? So you have to think about it as this, Bitfinex apparently is home of some of the larger whales in the space. So there's less friction if you turn off one of the premier order books within the market. And there's a lot of people that debates Bitfinex's significance compared to maybe some other exchanges like Huobi, OKX, Binance. But there's a lot of whales that do still operate on Bitfinex. And I mean, I don't want to just say that that doesn't exist because there's more volume on another exchange, right? The case with Bitfinex is it's not the leader in volume, right? That doesn't necessarily mean much though. So this being down definitely didn't help because you could think the market is easier to move around when you have one less bid that's getting in the way of any kind of sell pressure. Let's just go back to the chat. Okay, so yeah, I was in and out of spot. Yeah, it definitely was. And I always like to kind of like poke at myself for the things that I do that are not necessarily the best things to do. So I've been in and out of spot the last couple of days, and I was, a week before that too, I was like flip-flopping. I think the one reason that I feel like I could flip-flop a little bit more and be choosy is because I did get a good exit. I was exiting publicly in February and March, and then my last exit was less than all of those, right? My last exit was pre the large breakdown when we were back at the range lows, and it was like, all right, we've made a lower high now. And again, these are all, I've publicly posted about these, but, or I publicly posted before. It's not like we're LARPing and talking about it after the fact. But I feel like I can be a little bit choosy. There's a lot of people right now that they might feel like they're on their heels because they've given a lot back to the market. So I got into spot yesterday. I got out of spot. I got back into spot. I placed bids at 33. I actually have not spot bids at 33 right now, but I have, and this is not at 33, but I have, and I was in 33, but I got out of 33. But I have bids again from 32,850 down to 32,750. This is just for a flush of short-term trading opportunity, but I still do have those up. But you can't see, you're on this screen right now, so hold on one sec. In and out of spot position, I want to see, and I said, this is something that you could expect. You could expect this pullback further. But what leads to this pullback? How do we come into this level? Do we come into it, violently, or are we grinding down? I don't really like the fact that we're kind of grinding down. I don't like to buy support when we're grinding into it. I don't like to sell resistance when we're grinding into it. I would much rather seen, I would have rather seen that we just continue to hold the midpoint of this range, right? So we don't hold the midpoint of the range. All right, so we start trading lower. I'm a buyer back here. If anything, what I ultimately want to see was a wick into this low and then a very quick response. Just to show me that the other side of the market is there, right? Just to show me that buyers are showing up. So I've been in and out because I get into position, and I'm looking for, and it's kind of a mistake, I'm looking for price to move essentially on my time. Like, all right, this should get going pretty quickly. Once it starts grinding lower, I reevaluate and I just cut my position. First spot position I got into, I'm trying to remember exactly when this was because everything's just been a blur lately. I want to say like since the pandemic, my whole sense of time has been off, period. But either way, so I got into spot the other day, or maybe it was yesterday morning. This was, my positions were like 34.5, 34.450. So those were going against me, and I was like, fuck it, if they're going against me, I'm just waiting for the wick, man. Like I'll place more bids. I'll add more spot here. So I added more. Price went against me, and I finally just cut it. Like it ended up moving slightly back in the favor, or it balanced out. I still cut it for a loss, but it wasn't as bad because I kind of martingaled, right? I added to the position as it was going against me, but it was a spot position, so it's like whatever. But and then getting into 30, 33, I had just got out of that, but it was still I got out of that and treated it like a short-term trade. So these are kind of things that are, I wouldn't say that there's enough of a framework around that decision making, because I clearly could just say, and this is just the human side of trading. There are times when I'm getting into suboptimal positioning because I do, it's like the mistake of everybody. I'm trying to get in a little bit earlier than maybe what I could settle for if it meant, the cost of doing business is buying higher. Like, for example, why not wait on this to do everything that you want to see, have that behind you, and say, okay, then I'm buying that retest. All right, well, I'm buying slightly higher at that point, not getting the perfect entry. And these are things that you're constantly going to have to battle with. I said, one of the things I said was, one, spot position, I'm willing to do this. Okay. I have the luxury of a good exit. Didn't give back a ton to the market, so that's always good. I didn't give back a lot to the market at all. So I feel like I have that flexibility and comfort in doing that because of that. So I'm just kind of calling a spade a spade. And two, because it's spot, right? There is a lot more, I think, precision that's required if you're adding to your exposure and using some type of leverage product. And this, in that case, I'm always going to look for a much more precise entry. But yes, I was in and out of spot. I am back to being flat. I don't, I hope I conveyed why I don't like the drift. It's the drift of death. And I didn't coin that term. I think Tom Dante coined that. But I'm back to the idea of a sign of strength. Sign of strength just from here would mean reclaiming the midpoint of this range. And then I could look back up at the high and say, okay, this was that retest. Sure, it didn't, maybe, if we're back above the midpoint and it came after this grind, if it just turns, that's going to be kind of odd to me. More likely you grind, you're going to spike lower. But if we're back up here and I didn't get in down here, okay, cost of doing business at this point was saying I required a little bit more from price. And yeah, I bought slightly higher, but it's a fucking rounding error at that point. Let's see. How do you think of longing ×2 and having a passive approach? I mean, if you're using leverage, using 2x leverage, just as a reminder, one, leverage is for counterparty risk, right? So a lot of people don't use leverage properly. They don't position size properly. Get into a whole lesson with regarding that. What I will say is, well, I'm just using 2 times leverage. It's safe, right? Well, consider this. We dumped 55% off the highs. I know that's kind of like a massive standard deviation move compared to what you would expect anyway in a short period of time. That's not the norm, but black swans aren't expected, right? Things like that aren't expected. They're not considered to fall within the normal behavior, period, right? But they do happen. They happen quite frequently. So if you're using 2x leverage and you're like, imagine you're back at 47, 50K and you're like, well, I'm using 2x leverage. Surely if price moves against me, like, it's not going that far. I'll be okay. Well, guess what? Anyone who is long off the highs with 2x, they were liquidated past 50%, right? So I don't like to say anything with regard to how I feel about longing with a certain amount of leverage. You have to know your own system. You have to know your own risk appetite and know what you're getting into too. Not everything you can't say like, oh, just because it's a low amount of leverage, it'll be okay. With leverage, there is path dependency. Like, I say this often, and I'm realizing, obviously not everyone understands what path dependency means when I'm saying this. And I mean that you could be, if you're using a lot of leverage, you could be right about the direction, you could be right about the trade, but because it doesn't follow a certain path, in the case of, let's say, using 10x leverage, price ended up where you thought it was going to go, but it dropped 11% before it went there, and you are taken out because your position is very path dependent. It's very strict. Things that aren't path dependent but are time dependent are options, right? So if you're using options, you don't have to worry about liquidation, but you do have to worry about theta decay and time decay, right? Theta decay, time decay, same thing. So I don't want to say what someone should do with leverage. Don't you think that shorts got this too easy? Yeah, like the game theorist in me thinks that, of course. But what I find is that it's best for me just to focus on the intraday momentum plays within local levels, and I'll wait for the big stuff to reveal its hand at the break of the high or break of the low. I don't want to like we could continue to say things like, yeah, man, shorts. This can't break down because shorts would have it too easy. Um, but there's been many times where that kind of thinking or that kind of thought process, you end up looking back in hindsight and saying, oh shit, they did. Like, oh fuck. And then you say something like, you're saying right now, okay, because I don't mean that. So that's the way I'm kind of thinking right now too, right? I'm thinking like, we've been moving at the lows for a really long time now. It's grinding. It's not good. But if we get this breakdown, is it that easy? It's just going to continue down? Maybe it is. Maybe we're going to have that ripper, right? Because, negative news hasn't had a real effect, because we've seen a lot of positioning that indicates sellers are already getting in aggressively, right? Whether it's funding, whether it's seeing term structure flatten, periodically it was trading, futures are trading in backwardation. So we could say all of that, but there's been many times where something like, say, for example, let's say this breaks down and continues, you're not going to be thinking that anymore about those shorts that got it so easy. You're going to be thinking, oh my God, it was so easy. Why didn't I see that this was grinding down, right? Why didn't I see that this rejected at the midpoint? It wasn't easy. It was easy to make the assumption that it was easy to short when it was really so easy to see that what the market was, spelling out very clearly, which was a sign of weakness. So I would just be careful about applying that kind of thinking. I think I said thinking, but it sounded like thinking. And allowing it to inform your decision making. This is why having certain strict criteria, and for example, always for me leaning on strength and price action as sort of like the final requirement for me pulling the trigger is more beneficial rather than like letting your train of thought go far into those like, oh well, we're sure it can't be this simple, right? It can't be this simple that someone was able to just short the market further down. Because if you remember, if we look back on the bull market on the way up, it's going to look really easy. But during this entire time, there are people the entire time that are looking at this saying that this is, you could have looked at this and said, how is it this easy? You could just long dips and it's going to continue to move up. Well, if things have changed here, the easy trade for shorts would be selling the highs and waiting for the continuation move, right? It not being invalidated yet. So signs for a short squeeze to be initiated. You want to see the preceding evidence that we have so far, which is, funding being indicating that or indicative of shorts getting in aggressively pre-positioned. We see stablecoin open interest going up. I've talked about that before, how you need to buy to close your position. Then if you're using stablecoin platform and you don't have access to spot, you either have to convert into spot, which occurs as a buy also, or you have to buy back to get exposure. So we have open interest going up. We have funding in the negative again. We have futures trading a majority of the time at a discount. So the recipe is kind of there, but a lot of the times with the squeeze, it's not going to be just that you start trickling back up, right? If we start floating to the highs, grinding to the highs, okay, that's one thing. If you're grinding towards the highs, then maybe your squeeze occurs like that. But where we are currently, we're grinding towards the lows. And if you're going to expect a short squeeze to occur from this kind of structure, usually it's what this was, right? It's what already happened. The one thing that would be very peculiar about this structure, and this kind of goes to what someone just asked a second ago, like about shorts getting it this easy, is it the case that we don't have any kind of larger relief rally, right? Is it this week, if anything? That's one way to think of it. Like, is it this week that we don't even get a pullback to the 50 point between the the high and the low, right? Is it this week that price is just going to roll over from here? Where are we compared to previous structures? Maybe. If we look back at the last all-time high, not to provoke any fear in anyone's heart, but could it be that we're doing something like this, where you have a breakdown and this is more of a retest, but you never really get that much further back up towards the high. It took a really long time. You have these bounces all along the way, but you don't get this very clean retest, almost like what this was. But yeah, if I was looking for a short squeeze, the one thing I said, like, I don't want to short this. Um, I guess there's a stronger case for shorting it now if it breaks below the low, because and this might be a better way to put it, might be hedging, right? Because you are taking a short, but I mean like outright shorting excess in my portfolio. Um, I A short squeeze looks something like this, where you break below the low, where you take out all the swings, where you take out all the lows, and then you're trapped a lot of volume down there. Um, so I'm saying that I don't want to short outright, because it very well could happen slightly lower, but you would need to take out the lows again, right? Add more volume down there, and then start trading against that. The more I say it out loud and think of it, I I don't know. I have my reasoning for not shorting Bitcoin in that manner, because it's dangerous. So it's kind of like I'm accounting for the possibility that that very slim chance, that very low probability event might occur. And for me, that's like, all right, I don't. That's one trade I don't need to take. Put it that way. It's like, all right, that's a trade I don't need to take, because there's plenty of trades I don't take. But it it very well could be that this breakdown, because look at this range. Even if you tighten this up, and this is the range, and this is a retest, and this is again another failed retest at the midpoint, and we're breaking down, whether you draw in the range like this, or whether again you have that higher time frame structure drawn, no matter what, the midpoint's the midpoint. Pretty much in both cases it's in the same area, whether it's this midpoint or whether from this high to the low it's slightly lower, but in same, relatively the same area. So if we have a failed retest, a breakup, a failed retest again, this breaks down, it very well could get very ugly, and continue much further down. It's just one short that I guess I'm not going to take. Let's see, where'd the chat go? For a short squeeze, you need a lot of participation, right? So that's why at key contextual levels and higher time frame pivot points, that's where that's likely to occur. Yeah, a quick and violent move I'd be more grateful for. I mean, because what ultimately we want to see for a bottom is some kind of capitulation, right? Despair almost across the market. It feels like you never really know, because my Twitter feed, your Twitter feed is different. That's like one thing that we're looking at that might have been a lot more useful in the past. But who knows? Like, human behavior to some extent might be homogenous in the sense that how 1,000-person group of people feel, that's a diverse group, might also be a reflection of what the whole is also, right? So if I look at my 2,000 people I follow, and I see that they all kind of have the same feeling about price action, there's kind of ubiquitous bearishness across the market. It's unanimous almost that everyone is bearish. Jesus Christ. I'm at that point in my beard where I need to cut it, because it's like getting up into my nose too. But yeah, the market is very bearish, but does it end after that? Or you just have one big dump and then everyone's bearish, and then that's it? Again, the market has been moving up now for over a year, and we're a month into a correction. So I don't know if it's that simple. I think no matter what, the bull market is delayed for months. Like, in no reality do I think there might be one universe out of 99,000 that, and that's a very low number when you think about the universe, but I think it conveys the idea. There might be, one reality where this just breaks up and continues up. You just have to think about all the bag holders now, all the new people that just want to get out at break even. Like the new person who bought Bitcoin, and you have to think about it like this. They might have complete intentions of being long Bitcoin, but it's the feeling of, and everyone has had it before, and I'm kind of talking about it when I'm talking about getting in at a spot. It's like, okay, I had this idea for price action. It broke down. All right, my idea is kind of wrong. Maybe this idea will be right. Let me get out of position and reevaluate. Like, I want to be long. Like, you could very well get back in a position, a couple dollars higher, and it could have been right. You should have just held. You incurred fees. You got in and out of position. You paid the slippage, et cetera, et cetera. You would have been better off if you just held it because it recovered and came back to that level. But most people are going to cut at break even. All right, they're going to say, I like it. Let me just step away for a second. I'll get in it if it does X, Y, Z. I'll get in it tomorrow, whatever. It doesn't matter. all of that thinking leads to an area that is very high chance of being sold hard. It's the best way I could put it. Just you expect that there's going to be a lot of sell pressure on a return back to that area. Yeah, so the longer the range, the more you should expect sustained momentum. Yes. One thing that I do say, though, and as a reminder, is breaking up to the high, I think still very well leads to a much longer range. So this is a range. This was a range up here, but there were micro ranges within there as well. We're back within a range over here. This should lead to a sustained move that is larger than, and you could almost think about it like this, a measured move that is larger than the depth of this range, right? So kind of a one for one. If you break out of this range, now I'm not expecting something like this that just falls back within. I'm expecting, kind of something like this, right? Same thing to the downside. A big move, guys, is, 30K to 24 is a big move, right? I'm not talking like this consolidation leads to a much longer trending leg, right? I'm keeping things within perspective of, okay, this is a range. Yeah, it's not a huge range, right? It's a great range. It's a great range to trade. But it will lead to a sustained move. And what I mean is, if you get acceptance, and we used to have, I used to have all the statistics for this back in the day when we were stuck in this shit down here. If we get a daily close, like something like a daily close above 40, a daily close below 30, it's almost like you could guarantee that, you don't want to be a seller the first 24 hours after that daily close. You want to buy the first significant dip. And you could expect that, and I keep saying, because it's something that I'm familiar with, but maybe not everyone can just, I could just say that, and everyone, I expect everyone, I take for granted almost that not everyone might understand this. But, if we break and accept above here, we're talking 4 or 5 day sustained move. If we break and accept below here, we're talking, 4 or 5 day sustained move, right? So, yes, there has been a build up in this range, and it should lead to a move that is sustained. But we're not talking like a time period that's longer than the range has occurred for. So people talk about flash crashes. One thing to remember, there's no rule book that says you can't have multiple flash crashes. If you were to pick one asset to have multiple flash crashes, it would probably be the one where you have futures products that have this kind of convexity, as with BTC margin perps, right? That create this kind of panic selling pressure, and complete lack of support in the bid. And also, you have an exchange liquidation engine to work against too. So this kind of dump right here, you could characterize as a flash crash in that it happened in a very short amount of time, right? Crazy liquidation move. But there's no like, oh, we get one flash crash and then we're good, right? That's not necessarily, that's not written in stone, right? You could have one flash crash, another flash crash. I would say that, if we're looking at this structure as a whole, we could definitely make a case for this having more leverage in it than what might resolve from here, right? The lower we go, the more you could assume that you're closer to the point of less leverage in the system. That's, you can't say that definitely, right? We could technically, you could get a bunch of longs sneaking in right now, building positions that are under collateralized, but it's not really being reflected in the positioning that we normally look to determine that. So what I'm looking for to see depth is, this is Okotoki. So this is a great page. The legacy DOM is from yours truly. So the creator of this We were going back and forth. He created a well before, but when I started sharing it and giving him my feedback, I was like, you got to create a legacy DOM that's like blue and red. It reminds me of Trading Technologies. And then Hasaka has his own too. But yeah, this is Cantor and Clark's input right here, legacy DOM, light and dark. But this is all the order books for the exchanges that I'm paying attention to. You have a bunch though, right? So you could look up all the coins too, right? All different alts. Change the aggregation. You want to see you're really far away from current bid ask. This is not something I put too much attention in or pay too much attention to. The only time when I'd really focus on it is if there's an obvious like huge wall that's shared between exchanges that is not giving way, it's not fluctuating at all, it's kind of taking activity into it too. Other than that, I'm looking at this just to see the price differences very quickly. Because this is, all these things are just advertisements. This is an advertisement, that's an advertisement. All of this liquidity can be pulled and stacked to manipulate behavior. So, and if you're the closer you are, the more you're just seeing the behavior of market makers and high frequency trading systems. So, and then this is view based. This is showing predictive funding. This is Coinalyze. I have the aggregated predictive funding. So it's all these things that we're seeing right now are like the reminiscent of what a bottom should look like in that feedback, right? In basis, in funding. But also, one thing to consider is we've had a large leg down. Everyone is expecting that this is the bottom. The big move has been put in. But what if this is the beginning of a bear trend and it begins the same way the bull one did? Very strong, right? This was on very positive funding. You know, by all means, you could have made a case for the reversal on the same, you know, under the same train of thought. Like, oh, there's a lot of longs borrowing, there's a lot of leverage in it. Like, we got to wash that out. No, the dominant trade was long very clearly across the market. Everyone wants to be long. To get long access or get access to that increased exposure long, you got to pay a fee, right? It comes at a cost. It's at a premium. You're paying a premium because you're buying a more expensive Bitcoin and you're paying an interest rate component to access that product. Okay, so what if the trend is bearish right now, which it is, and the dominant trend to take is short, and therefore that short's going to cost you more money than it would in the bull market. Right? You're not going to get paid to take the popular trade at this point. It's going to cost you money. So the point of that is these things are useful to look at, again, when the sign of strength and price action is showing up. Otherwise, it makes sense that the negative funding is that way because the dominant trade to take is to be short or to be hedged, right? The one thing about shorts, though, too, is if you're short, you're not penalized as much as if you're long and price goes against you because of that convexity, right? Because this is your return profile, right? If you're long and price moves up, all right, your returns diminish. If you're long and price moves down, it accelerates down because you're margined in BTC, right? If you're short, the opposite happens, okay? As price moves against you, think about it like this. Your losses slow down because you are margined in BTC. So that whether you put up 1 Bitcoin of margin, just for the sake of example, yeah, your position might be outright short and it might be going against you, but the Bitcoin that you're using to hold that position is going up in USD value. I don't know if we're going down to 20K. Like, it's not something I'm thinking about right now. Yeah, continue. So I don't want to put too much thought into Bitfinex longs and shorts because that could be psyops. It could be an ARB. It could be a hedge. It doesn't have to be an outright directional play. So I don't want to put too much thought into that. That's why I focus mostly on order flow and price action because there's really no, like, it is what it is, right? Price is either making a new high or it isn't. It's either finding support or it isn't, being rejected or it isn't. Buyers are either coming in or they're not. Absorption is either taking place or it's not. Could you provide, yeah, could provide some entertainment on ETH for sure. What's up, Ross? Exactly, white wagtail, perfect. Just remember how easy longing was on the way up, and bears are like, it can't be this easy. And this is like when trends occur in BTC, they tend to persist. longer than you would expect. Price goes higher than you would expect and lower than you expect. And the assumption to make that's incorrect is that it's going to be over when you expect it to be over. Right? It's going to turn, we can't drop much more. If anything, one thing that Bitcoin can do because it's young is continue to change what has occurred historically as a norm. Like we say things like, well, it's already dropped 55%. Like, it has to bounce now because it's always done that. Well, I mean, if it always did that over a 100-year period, that's one thing, but it's only always done that over a 12-year period. And yeah, we might be able to extrapolate from that and say, well, that might be a good enough sample of time to expect that is an accurate sample to apply moving forward, but it's still historical information, right? Things can change moving forward constantly. Stablecoin open interest, you can go on to Coinalyze. So right here, share this in chat. I need to work on this beard because my nose is getting so itchy. And it's the little hairs that are close on the top of my mustache that you probably can't see. That are like one or two that's pointed up. We'll look at ETH in a sec. Yeah, so Captain Youth, I was in, when I was in majority of my, when I'm trading BTC, if I'm trading low time frame, when I'm trading intraday, majority of the last year and a half, I've been long still, a longer position trade. You could call that a year-long trade. It's my spot Bitcoin that I had exposure to for years, right? That I had a really nice cost basis on, and I got into long-term status. So that's the only reason, guys, I sold. I sold because it was a more economically sound decision for me to sell, incur the long-term capital gains rate, than gamble with maybe a larger drawdown and that as well. So I sold because I hit that status and it was like, okay, I could sell a large portion of this, only incur this tax. I don't know how much further price is going to drop. I'm not incentivized to not, if you are trading, you have to think about the cost of tax. I know some people don't pay taxes, but I pay a fuck ton of taxes. My taxes this year alone were astronomical. But if you're paying taxes, you have to consider that into your trading, right? Because certain trades are not going to look the same or worth it to close out if they're short-term trade. If there's short-term status, and you have to think about what the cost is going to be after closing it. Some of them might make sense to wait it out, obviously, right? That's why sometimes holding is superior. It's because of that tax as well. So yeah, I absolutely do take longer trades. I just I don't think we're in a position right now to where I want one. We had a break below the low that I really liked, and I was saying that would set up. So was this when I was on vacation? Don't remember. And I said, hey, this would be a great setup to add a longer swing position, meaning not just an intraday trade, right? Because we're at an extreme. We're at an area that really defines the range. Okay, so I got in along here. I added spot here, and then ended up getting out spot, not a week later, right? So I didn't hold on to this position. So I ended up cutting that, even though I said that this could be a long-term trade. So it was a longer-term trade compared to my intraday trade, but by no means was it a long-term trade. I ended up cutting it, right? Same thing yesterday. My intentions are to be in a longer-term swing when we are at a good area to define one, right? So if we're break below the lows and we're retaking this high, this to me is a longer-term swing back up to the highs. Not holding the area though, right? Longer-term positions would be that I would be most certain of, but still have a cap, because we broke down, guys. That's what it is. We broke down. This is not trend continuation in my mind anymore. It's maybe a much larger range developing, and that's it until we do this much longer and then accept over the all-time high. But until we accept over the all-time high, I'm treating this to this as a swing trade. Let's say we break down, find support down here, whatever sets up down here, up to here. If we reaccept within this range, from here to here. If we reaccept above, from here to here. If we reaccept within this range, right? I think you get the idea. If we reaccept within this range, from here to here. But that is it, right? I'm willing to add and hold Bitcoin spot from here to here and monitor it, meaning you know, if I'm getting back in a spot and considering again that I'm just going to be paying to continually trade, um, and I have higher time expectation. I don't know. You know, honestly, like I can't say like what my decision will be when that occurs. Um, but I do think that Bitcoin is going to be breaking over 100,000 within the next year or two. So I should be positioned for that, right? My idea is that Bitcoin is going to be much higher than where it is, but it's a, you know, what is it, like a 3x, a 2x from here? It's not tremendous, but I think that, so I want to be positioned for that. I'm just not sure exactly what's going to inspire me to get back into spot completely. I had the idea that I'd be doing that on the breakdown and reclaim. Didn't hold on to that. I just don't necessarily trust this yet. I would much rather be committed here, buy higher. You know, let's say that we show there's, you know, all the signs of strength at the high, and then maybe I'm holding on a little bit longer, and maybe we're talking about these highs, and I'll add more if we break above. That's clear to me. If we break above these all-time highs, I'll be back in spot completely. And you might think, oh, that's why would you do that? I mean, you're just talking about who's buying if we're back above here. If we find support above the all-time high, you know, break of the all-time high is a high probability continuation play. I just don't think, you know, I just don't think that's the way it's going to occur. It sounds funny because I said, hey, why would anyone do that? But I don't think this is going to occur. This is where I definitely would add a position though, because at that point I think it is going much higher. It's just not something I think is a high probability chance of occurring. I hedged a lot, Mondo, for the longest time. I've posted about hedging. And yeah, I've hedged many times during the all-time high range. I've hedged on the way up. And I do hedge. You know, I use the futures products to do that. But at this point, I'm hedged by being in cash. So I do have Bitcoin exposure right now just to allow me to trade perps. So I have something, I don't know, I have like maybe 10 BTC worth of exposure or 6 BTC, anywhere between 6 and 10 BTC worth of exposure just to place the adequate size trades that I would normally trade intraday. And that's so that I could trade perps because they're a little bit more liquid than USDT margin futures. I'm going to look at ETH now. So the long-term tax rate is anywhere from 15 and up. Depends on your income. You end up paying more. You end up paying over 20. I mean, actually, no, that's not something I'd say for everybody. But for myself, the one benefit is being married. You save money being married. Okay, so ETH. ETH BTC chart. I don't really focus too much on it. I'm going to pull it up just for the just for the sake of this, showing signs of strength against BTC the last week. Okay, that's good, right? ETH has outperformed Bitcoin for the last year, and it typically does, but it outperforms the downside too. It underperforms rather. So there's much more downside capture when BTC has a nuke like it did. If we're looking at ETH on the high time frame, you're having a failure right back at the underside of this structure, which is, you want to see that if we're looking at ETH and we're looking at on the weekly chart, I said this looks good because we didn't fall below this previous cluster. All right, that's good. This was a swing failure play that I took, so I was a buyer down here. I'm no longer in that as well. If you could imagine that if I say that I'm out of BTC, I'm definitely not in ETH spot anymore either. But this structure is an area you would want to see act as support. I would expect more locally even better. So if you have this breakdown and this rip up is going to be taken seriously, and we're looking at the higher portion of this range, you want to see that it's not doing what it's doing right now, which is breaking down below previous market structure. So ultimately, this is we're looking at this moving average that's still in the chart right now. This is the 20-week moving average. This little cluster right here, you would have wanted to see that just in terms of local strength, that this acted as support. One sec. So that we found support above that level. Without support above there, this could very well be, and now it's taking a second to load. Sorry about that, guys. What the fuck is going on? All right. Let me just take the profile off. Maybe that's what's doing it. So let me just put the daily and weekly levels on clearly. You have this zone right here. If you look at the weekly, it's that weekly low as well. So we're just going to box out that entire zone. All right. So yes, absolutely could find support down here. Yes, you could say that maybe support would be established right here. But for any kind of strong reversal, this is not adequate. I want to see that we're above, right? So again, using this as reference, it's within this zone as well. But this is an area where it pays to expect that a rally would fail, right? So we've had a major breakdown, right? We've had a bearish shift in market structure, a bearish shift in the trend. This is where rallies occur and they continuously get sold. So these areas are arguably better areas to look for shorts than longs, right? Bears are in control, right? They could slow down the same as bulls and then continue to resume. There's no rule that says they have to keep pace at a certain, at a certain rate. So for ETH, I need to see that we're maintaining support above something like 23, right? So 22, this is 22.76 area, but I think 23 is a good area to expect that support, if we find support there, that is a good platform to move back up towards these range highs. And if you look at it, I said the one thing that I said about ETH was good reasoning for me taking the long at the lows is that actually this low, we spent most of the time well above it. So this low down here was a high probability bounce because we came from a distance and we came violently. So that being said, most of the ranging behavior, and you can see when you look at this, actually took place up here, right? So the underside of this structure, and this is why, you look at a daily chart, a weekly chart, you get your daily, weekly levels. You don't see what took place within it though, right? Where most of the interaction occurred, right? Where after the breakdown, this is where your retest and pivot occurred before breaking down towards these lows. So this little area right here is my line in the sand. So if we're above here finding support, then we're looking at 26. So target's still the same. It's just, I mentioned that target the other day, but we're just failing at the exact area you would expect to fail if the market is going to remain bearish. So as long as ETH does this, I anticipate that ETH is going to continue down as well. Like if BTC continues to break down midpoint and can't reclaim that, then it's going down, right? We don't know how much further it's going down. We don't know whether or not this down move leads to, a massive squeeze. It takes everybody by surprise, but we do know high probability that if it's failing at the midpoint and it's making lower highs, then it's failing earlier than it did prior within the range. That's showing a sign of weakness. And not for nothing, ETH structure, this move like this, down, bounce up, and then first bounce after that, we've seen that before with ETH, where it's gone on to continue to mosey on sideways, rotate a little bit lower, bounce, right, put in a low between that, and still have a lot more time that took to develop before even doing anything remotely similar to a reversal. So that's one thing I think that I should really harp on is that, again, and just to drive this home, this is a weekly chart from March 2020 lows to the all-time high, 57 weeks. So again, it's about a month and a half over a year. So a year and a month, just put it that way. I have the worst sunburn on my back. It's itching my back right now. We went to the beach the other day and put the suntan lotion everywhere except like you could see where my fingers went with it and then where they stopped because I was leaning forward and my back has I have tiger stripes. I actually look like a box of Neapolitan ice cream because my arms are really tan. I have a farmer's tan where it gets a lot lighter and then it goes to a red area on my back. So Neapolitan ice cream, you got all the different flavors. You have, vanilla, chocolate, strawberry. That's what my body looks like with the shirt off. I was going to go to the gym the other day with just a tank top on, and I was like, I look like Turkey Hill ice cream or Breyer's ice cream. But so you have 57 weeks up and then a breakdown, and you have 10 weeks down, 4 weeks ranging, right? 5 weeks ranging. If this is a bear market, they don't end that fast. Okay, so one thing about 2018, I'm going to wrap this up, is, And I don't want to say this because, this time is arguably very different environment wise. Um, in terms of macroeconomics, in terms of Bitcoin being accepted institutionally, the plumbing being put in, being over $1 trillion asset class, all of these things that are way different than they were in 2017, 18. This time is different with that in those details. But in 2018, guys, people were saying the exact same shit here. The market was split down. It was there was a lot of people that were bearish, but there were a lot of people that were thinking that this was going to just continue up. And it's the funniest part was like when you got to this breakdown, when we got all the way over here, and you're still thinking like, can you believe that people thought that this was going to just had a little cooling off to do, and it was going to rip back up. But this was a blow off top. This wasn't. So, but there might be a good case to make for the fact that this market is not just BTC, that maybe ETH was the blow off top asset. Maybe if we looked at like total market cap as a whole, maybe that's a sharper indication of maybe that's a sharper structure that looks more like a blow off in the entire market cap. Kind of. So, but crypto market total market cap is misleading. But still, BTC could have been muted for, this time around it's muted, right? This time is slightly different than the last. But it definitely doesn't, it's not my expectation that this moves fast. Oh, thanks, buddy. Congrats on being a doctor. What are you congratsing me for? It's just another house. It's not like I'm moving out of my parents' house. But thanks, man. Thanks, Doc. But I think that's that, guys. I just wanted to cover like some higher time frame stuff, shoot the shit. Again, going to be giving away some BTC from this stream. So the only requirement is that you go to my Twitter page and just give some feedback, right? Tell me what you think about the market. Go to this post right here. Leave a comment below. Tell me what you think about the market. And I will go ahead in 24 hours from now do the same thing I did last, which is pick someone to give away some Bitcoin to. Give away $100 in Bitcoin, so yeah, but I think that's that. I'm gonna do another trading stream. What's today? Is today Thursday? Yeah, I tell you, I don't know what day it is. Tomorrow. So I'll do another trading stream tomorrow. Might be later in the evening, but it'll be one of the quiet streams where we actually just go into Man, you guys didn't have any sound. Okay, so that's so funny. All right, so let me give you guys a second. I'll repeat it real quick. Yeah, use your imagination. Shit, I didn't have the sound set up for that screen. Hold on one sec. All right, so just let me know when you can hear the sound again, and then we're just going to compress everything I said to a really short snippet. No. Once you can hear the sound, we'll be good. Probably like a 30-second delay. Okay, so what I was saying was I initially had I was looking for a scalp at these lows. So as you can see on the one screen, you saw a bunch of orders for 50K. In total, I had 300K orders at, this was at 32,850, 300K orders at 32,800, 300K orders at 32,750. So I since then canceled them. I think you guys saw that. What I was talking about was before the stream started, I was anticipating a wick below this low that ended up giving what we had right here. So those orders should have been canceled. But I wasn't paying attention to the actual lower time frame price action as we were going through the stream. And now seeing that we have this kind of grinding behavior, I don't think that we would just stop after taking out those lows. I think we would be looking at somewhere along these lows into this gap. Again, and I looked at the TPO chart, we're talking about the top side of this balance area, the bottom portion of this trending day, or rather it was this trending day, but you're looking at right down here. Initially, like I said, I was anticipating maybe this low would get ran, all right, and we'd get a move up to 34. But the way that this is shaping up right now, I think that you could probably have a break below this low that ends up finding a little bit more structure down around 32.4. So I apologize because I didn't have the sound set up for that. I don't think I was saying anything else, though. Have a trending day, as I mentioned. Pretty efficient trending day so far. You got a big belly down here, though. Again, short-term trade from 33.8 to 34. That's just a very, very tight scalp. And that would mean something like this, which probably wouldn't give you an adequate amount of liquidity to even chase after, because, you know, a lot of the times if you're putting in a bottom pattern like this and you break above this high, it's going to be just a single wick into this level and then probably a failure after that. So I don't think that trade's even setting up. But if, you know, you continue to move sideways, took this low, and then you're trading above that level, then yeah, you're starting to look back at these highs. So, which ultimately sets up the idea that originally I was looking at this low, if we took it, to move back up to that 34 area. But I think that was that. See, it's good when I don't have the sound, because then you realize how much time I just spent talking and how I could cover half of the stuff I talk about in probably a fraction of the words. So, but I did say that tomorrow I'm going to be doing the, where'd my TPO chart just go? Tomorrow I will be doing the live trading stream. So where we'll just be on, hold on one sec, I'm going to change it and turn the sound on. Be on this. So tomorrow, I'll move it, what's cut off a little bit? Here we go. Tomorrow we'll be just trading. So you're looking at, you know, the TPO chart down here, weekly, regular, daily. We're looking at the tick chart, which is showing imbalances right there. So you already have a buying imbalance off the low. Not necessarily a good look. So this most recent imbalance right here, that is 78% of that aggressive buying, and that's over 5 million contracts in under 3 seconds. I like to see a lot of these add up. All right, guys, but I think that covers it. Impact of non-farm payroll, I saw you ask this before. I don't think it's going to have really an impact. If it has an impact on the S&P and on the ES traditional markets, then it'll have an impact on crypto if there's an extreme impact. But I don't think it's anything to even think of. All right, guys. Until tomorrow, I will be leaving you. And like I said, I don't know if you heard me when I was saying. I don't know what screen I was saying it on. If it was on the one that didn't have sound or it did. If you go to this, leave a comment. Oh, okay. So that came through. And I'll be picking who wins BTC 24 hours from now. All right. I'm out of here.